Is the fuel oil business profitable in 2026? Let me draw you into a true to life story. In 2024, in Dubai's Jabal Ali Free Zone, a group of three friends decided to launch a fuel trading startup. They saw headlines about the oil sector's billion-dollar returns and thought, this is our chance. Armed with investment from their families, $1.8 million, they set up contracts with refineries and lined up buyers across Africa and South Asia. For the first 3 months, everything looked bright. Orders came in, the commissions grew $35,000 here, $80,000 there. But suddenly, in February 2025, global crude prices slid below $66 per barrel. Their biggest buyer delayed payments by 6 weeks. Logistic costs in the Red Sea surged due to new regulations and insurance premiums doubled. They went from expecting $500,000 profit to breaking even and nearly missing payroll. That's when they realized the fuel and oil business is profitable, but only if you manage every risk as if your life depends on it. Hi there, I'm Rizwan Khazi, and in this video, I'm gonna explain whether the fuel and oil business remains profitable in 2026, drawing on real case studies, challenges, and the exact steps you need for success in today's complicated market. So make sure to watch until the end. And if you haven't joined my full course on oil and gas exports yet, there's a link in the description. Click it to access the complete training. Now, margins are real but volatile. To begin, let's look at ONGC, one of the India's largest oil producers. In October 2025, they forecasted annual profits of $1 billion from oil and petroleum trading, despite international crude stabilization around $60 per barrel. But the problem, costs are rising and profits are shrinking compared to the record highs seen in 2022 and 2023. Even industry giants like Aramco and ExxonMobil face a 20% drop in their quarterly profits this year as global prices cooled off and refining costs went up. The challenge for newcomers is surviving those swings. When oil prices dip, revenue drops instantly, but your delivery contracts, staff salaries, insurance, those costs stay stubbornly high. Traders who weren't nimble enough saw their profit margins cut in half, sometimes turning to losses within weeks. The way to succeed: always run cash flow forecasts using worst case price scenarios, negotiate flexible terms with suppliers and buyers, and crucially, hedge your risk using available financial tools, or you could be wiped out by one surprise dip in prices. Successful traders in 2025 shifted their focus from volume to margin management and kept returns steady even as prices bounced around. Next, the opportunities are there if you specialize. Now, let's move on to another angle of this problem. Not every business in 2025 is created equal. Some sectors like natural gas and LNG saw exports boom. US LNG export capacity rose by over 20%, reaching 14.7 billion cubic feet per day, with new projects launching. Companies specializing in niche markets like low sulfur diesel, bitumen, and biofuels posted steady profits. For example, Chevron's basin output grew by 6 to 8% in 2025, even as oil prices softened globally. The challenge: fierce competition and regulatory barriers. Many startups run into compliance problems, custom delays, or lose out to bigger players. In one case, a UK startup lost $200,000 on shipment when they failed to get clearance for a new renewable blend simply because they didn't know the rules had changed. What worked for success? Focus on specialized niche, learn local regulations in and out, build relationship with reliable logistic partners, and get up to date with the latest sustainability standards. These open new doors for business in 2026. The winners were those who didn't try to trade every fuel type. They picked their specialty, built expertise, and anchored a defensible market. And here the next one: tech partnerships and adoption decide your fate. But that wasn't the only issue traders faced in 2025. Profitability now depends on how fast you adopt. AI driven analytics, automated compliance checks, and digital platforms are moving in. Companies that embrace technology saw overheated costs drop by 20 to 30% and close deals faster. Strategic partnerships, whether with the refineries, financiers, or experienced brokers, provided leverage against price swings and regulatory changes. The real challenge is resisting old habits. Some traditional traders refuse to digitize or streamline their workflow. They struggle to keep up and watch new entrants who could code, clear, and deliver in hours instead of weeks. Now, here are the instructions for lasting profit. Invest in digital platforms for real time pricing and compliance. Build long term relationships with partners who bring value beyond price, knowledge, logistics, and market access. In 2025, the traders who survived and grew profits weren't necessarily the biggest. They were the fastest learners, quickest adopters, and most disciplined deal makers. So now you have seen how fuel and oil business profitability plays out in real oil and gas deals in 2025. The returns are real, but you must master risk, specialize, and adopt. But this is just one part of the oil and gas trading journey. In my full course, I'll walk you through every procedure: DLC, SBLC, CIF, FOB, TTV, DIP test, and more. Join today and you'll learn step by step how to avoid scams, close real deals, and make big profits. The link is in the description below. Don't wait, start your oil and gas success journey now. See you in my full course. Thank you.